Okay, if we move over to the vols, so like we've already said, very range bound, realized vol absolutely tanking to pretty much record lows. I can't remember the last time we've seen realized this low. We had 10-day realized on Bitcoin sub 15. We had Ethereum at sub 20. I mean, these are looking more like equities than they are looking cryptos. Implied vols have continued to drift. So you can see they've been heading lower. Obviously not able to keep pace with the realized. And because of that, and implieds have to kind of trade to some extent in line with realized, right? As that theta build just proves impossible to carry. So people kind of shedding some of their options to just try and manage that theta bleed over the holiday period. But vols have started to recover and bounce back very slightly, obviously, since then. But the carry, as that realized is so low, the carry is back to close to 30 vols. You see those big red bars there showing you how bad it's been to be long vol, basically. Okay. Now vols are obviously looking a bit cheap now, but it's hard to really get too bullish on crypto vol because there's no real catalyst in sight. And without a catalyst, it's hard to see a sustainable vol spike, right? We do expect activity to come back at the start of the new year, but we do think front-end vol spikes will be relatively short-lived unless something material changes and spot can break away from the recent range. And I find it hard to see that happening unless it's to the downside, and it's probably going to be in tandem with a stock market sell-off as well. So watch that space. Maybe the catalyst for that is something like CPI next week, maybe something to watch out for. If stocks really do tumble on that could maybe drag crypto with it. But, crypto's just got bad news after bad news, and it doesn't want to move down or up at the moment. So hard to see really what's going to shake crypto out of this kind of snooze fest that it's in. Yeah. Okay. Moving on. If we look at the term structures, so obviously no surprise to see steep contangos across the board in these curves. With realized dragging down that front end, but the medium term part of the curve obviously pricing in a term premium for potential volatility that we may see later this year, as people think there's lots of unknowns that can occur, and it's looking like a tricky year for macro as well. The ETH Bitcoin vol spread that we obviously always track is sitting at about just under 10 vols. I see this green line here, under 10 vols across the curve. So you can see over the last week, it has gone from about 14 in the middle down to sub 10. So sub 10 flat, pretty much where we are now. We have been eyeballing that and looking to think about accumulating some Ethereum vol, or maybe the spread even, if that spread got sub 10. So that is now the time to start shipping some of that in, if you're that way inclined. Obviously, steep roll down in the curves makes it tricky to buy February or January vols, because they're just rolling down so fast. And if this thing doesn't move, you're bleeding theta, and the roll down of the implied is hurting you at the same time. So you're probably better off parking yourself in March or even longer. I would err towards June, to be honest, because that gives you plenty of time for markets to kind of shake off this kind of range bound dynamic that they're in, and start to actually move again. Right. And then implied vols have got some real upside to go. Obviously, you're paying up for that June vol. If you're going out here, those vols don't look anywhere near as cheap as, let's say, the short end does. But that's for a reason, basically. Okay. So generally, I still prefer to park myself in that. And if you compare those longer dated vols to their own history and where 6-month vol typically trades, they do still look pretty cheap. Right. So that's kind of the way you should be thinking about it. Don't compare them to the front end that's trading ridiculously cheap. Compare them to their own history, and then you'll see there's some value there, basically. Okay. If we then look at Skew, Skew has started to soften as well, not massively. You can kind of see, and that was expected as risk premium got crunched. You'd expect Skew to start to drift as well. So we have seen that BTC Skew trading lower than ETH Skew, as has kind of been the case for quite some time now, as people perceiving that in a downside break, Ethereum is going to have more beta and is going to crack more to the downside. Okay, so that makes sense. Call supply also hitting the front end maturities as well, and that helps with the whole Skew being bid for puts dynamic, right? If there's more supply of calls, then that's going to push the Skew, and that may also be why Ethereum Skew is a bit steeper. It's actually because there's more supply of calls coming from Ethereum because there's still some juice to harvest at the relative higher levels of vol that you get in Ethereum, that people would rather sell calls there, right? So that may be driving that kind of relative bid for Skew. Now, I do think we'd need to see more tangible upside, a more tangible upside catalyst to see a shift in Skew back towards calls. So I suspect put Skew will remain for the foreseeable future. And until like a Fed pivot is really confirmed and we see crypto just like rip 20% in a week on the back of it, I don't see Skew really materially shifting back towards calls. You might get the 1 week stuff that sporadically catches a bid as people try and opportunistically buy upside, but really in the middle part of the curve, the 1 month to the 6 month stuff, I think the put Skew is going to remain whilst the macro still looks quite uncertain. Okay, it might be worth owning some Skew for a downside break if you think that is coming, as the vol now has compressed so much that if we were to get a downside break, then implied vol's got so much upside from these levels if we were to start to really move again, right? But until we start to move again and realize vol picks up and stays high, then implied vol's going to always see that mean reversion, and people are going to reflexively kind of sell into any vol spike. So you need a combination of a downside break and a sustained pickup in realize to see Skew really perform to the downside. And that's kind of how I would see it right now. Okay. Then looking at the individual dashboards, nothing massive to add really. Like I say, spot's been pretty snoozy. You're looking at the strategy compass. Obviously, it's going to be screaming buy vol, buy vol. That's because we're down here, and spot's relatively neutral in its range. So that's why it's saying buy straddles or strangles. But when you've got percentile ranks in the carry of 95%, you can't blindly just buy vol because it's not moving, right? Really, what you want to see is this number closer to the 50th percentile or lower, and buy straddle screening on the strategy compass where you're getting confirming signal that vol's cheap and it's carrying itself fine. Let's go and buy some vol. Right now, we don't have that message, and we don't have that coming from either Bitcoin or Ethereum right now. We move over, similar story, 93 percentile. The vol does look low. It looks very low. Like seeing Ethereum vol 1 month at 53. I mean, that does look extremely low, but low vol is not always cheap vol. And that's why we have to make sure we always check the carry indicator. We always see how this stuff is moving, because it can be quite deceiving that way. Okay, looking onto the flows, it was a pretty quiet period as expected, right? So not a ton of flows in the market that were really market moving or that interesting. So light flows. January call selling though in Bitcoin, we did still see that in the 17K area. So that was there. We saw a bit of two-way flow, some buying, some selling there, basically, because those calls do look quite cheap from an absolute premium perspective. We also saw some protection in the 15K puts that was trading as well. But again, not massive sizes. And then in terms of the Vega part of the curve, June 23 upside is where people are sniffing to buy vol, and they're doing it via either these outright calls, these 35,000s, or the 26,000, 40,000 call spread. Okay, so and these are actually, some of these trades are being done delta hedged, not just outright long. So they're not necessarily directional bets. They may well be Vega bets, because they're thinking we want to own vol, we want to park it to the upside because that trades at a discount because the skew is for puts, and that's the way we're positioning it and structuring it, basically. So it is quite a sensible way to buy volatility in those upside strikes, and doing it via call spreads is even more sensible, which I'll talk a bit more about when we go on to the crypto strategy stuff. Looking at Ethereum, we saw puts in the 950 and the 1000 strikes. That's always January expiry. No one really willing to pay up for protection any further than Jan right now, given how low the realized is. Looking at March 23, there's some decent chunks of calls going up, the 1500 and the 2000 calls as sellers. There was a massive, well, I say massive, relatively massive trade in March call ladder. So that's a 6,000, 8,000 and 10,000 call ladder, which are these big red bars here, which was a seller. So don't really know what that trade's all about, but it may well just be an unwind or something of a position, or someone just buying some crazy out of the money far convexity and thinking that, it's probably not going to do anything, but if we were to get some massive re-rating in crypto, then these things would kick in. But the problem with that is it's so short dated, right? March 23 as your front strike being 6,000. I mean, it's a pointless trade if you ask me. So I don't really understand the motivation of that trade. It doesn't make a ton of sense unless it's just an unwind to get some premium back. And then similar story on the June call spreads. You see this block here that I've highlighted. So people kind of tending to buy the area in the 21 to 2,500 strike and sell the 4,000 to 5,000 strike area in Ethereum. So again, maybe a Vega trade there, maybe a directional trade there, but in general, people kind of thinking that medium term calls to call spread area in that 30 delta zone, that's the zone they want to own. And then maybe the 5 to 10 delta zone is where they want to short the stuff, because that starts to ride up the smile and they get to sell that at a volatility premium, basically. Okay, so that's what I'm seeing in flows. All right, that's it for today's crypto, this week's crypto. Welcome back. Happy New Year. And I'll catch you guys all on the next daily. Take care.